It takes a lot for a small player to make it big in an industry that's dominated by a few giants. Yet, Capitec, which installed its very first ATM back in 2001, has grown into the country's fifth largest bank, servicing more than 7 million clients and employing more than 11,000 people. But joining us to discuss Capitec and its outlook, we are joined by Finweek Editor Jana Marais. Good afternoon to you, Jana.
Hi to you.
Let's firstly start off by looking at why Capitec has been so successful.
I think they've spotted a gap in the market and they've been very good at tailoring their business plan and their products around it. You know, I think it's very simple products. You understand exactly what you're getting, what you're paying for it. It's affordable. And I think the whole experience of going into a Capitec branch, I don't know if you're a client, but if you go in, I mean, it's a paperless system. It's quick, it's painless. Their operating hours are, suitable for working people.
Yes.
so I think they've just been very good at identifying what a big portion of the market need and that the existing players were not catering for.
In their last set of results, they said that their active clients grew 16%. Again, they've done some amazing things, but I think it goes back to the issue of can they sustain this?
Yeah, I think that's obviously what a lot of shareholders would like to know as well. I think some of the interesting numbers out of it is the fastest pace of growth since they've started operating as a bank, which I find incredible if you think how many years we've been hearing about this phenomenal growth story, that they actually continue at that pace. And then interesting numbers like their high income, number of high income clients, which they define as people earning more than 15,000 Rand a month. That was up 44% last year, which also shows that people are switching to cheaper options. And I think, they're still offering very limited range of products, and they're continually expanding that. For example, they will be rolling out credit cards soon. So as their footprint expands and their ATM network expands and their product range expands, I think we'll see it becoming a more attractive option for an increasing number of people.
So what are the experts saying? Are they saying this is a buy?
Look, I think it's an expensive share, and especially if you compare it with the big four banks. So they're trading at quite high PE levels. But the concern it's not only about valuation, but also they're only focused on South Africa, so very closely tied to the South African economy. And I think the big concern, and it's something that the CEO also highlighted, is that we've seen, they're concerned about the impact of rising food prices and inflation. A big chunk of their business is still unsecured lending, so they are worried. They're keeping a very close eye on their loan book, of course.
Yes.
So I think those are big concerns. The consensus view is a sell, but then, of course, if you already own it, you probably want to hold on to it.
Okay, and of course, there's that looming or potential downgrade that we also need to think about.
Of course, yes.
Jana, thanks so much for joining us this afternoon. That was Finweek Editor Jana Marais.